Hello, hello.
Well, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, joined today by Scott Redler. Scott, thanks so much for joining us today. Sorry, everyone, for the little bit of a delay we had here. We had a couple technical problems getting into this, but we're here and we are ready to talk to everyone today about trading. And Scott's ready to answer all of your questions. So, again, thanks, Scott, for joining us today. My first question is going to be the same as we had last time. Give me a grade this week of your trading so far.
My trading, I think, for what the market is doing, I still give myself a B.
Mm-hmm.
It's not really conducive to my style. I like when there's momentum. I like when, you can find good chart patterns that trigger, and there weren't many of them. We've been in this upper range trying to figure out whether we're going to hold or we're not going to hold. What's the narrative of the market? There was like a few good setups the way we like to trade them. Yesterday we bought, or 2 days ago, we bought some of the Bitcoin type of equities, and they all had a really good day Monday. They gapped up Tuesday. It was a nice day and a half trade. I like to look for day and a half trades that sometimes go for multiple days or weeks. That was a good one. As far as some of the other narratives that we've been, or active sequences that we've been trying to stay with, whether it's mega cap tech, it feels like it's faltering. Whether it's the spies or the Qs, it feels like it's faltering. So it's hard not to overtrade areas because it hasn't really shown us that it's over. But at this point, I feel like, traders are on their toes, including me, because it feels like with all the info out there, we could get a little bit vulnerable. So, you had to switch a few gears and continue just to look around and not overtrade and get frustrated, which I did once or twice in the past 3 days.
Okay, so Scott, the big news of the day today is, of course, focused on inflation. The March CPI came in cooler than expected this morning. So I want you to just talk a little bit about your strategy heading into a big market moving report like we got today.
Well, I like to map out levels. A lot of
Mm-hmm.
guys on the alpha team were all talking, and they said there was going to be about a 4 point measured move in the spies, or that's what the option guys were pricing out. If you took a straddle, they kind of want to make you lose, so they were pricing $4. So this morning I was like, hey guys, the spies are trading like 410. If it's a benign CPI or less than feared or shows real disinflation, we could probably go 4 points. So if you're looking to fade that move, don't start too early. If it's too hot, look to maybe buy a dip in the range closer to 405, 406, and basically that really played out for those who were looking for it, because those who wanted to fade the first move, free market, we went to, I think, like 413. What was it, like 413.75 ish.
Mm-hmm.
And then we didn't quite get to the low end of it, but bottom line is we had a mapped out game plan with areas of resistance, areas of support, and then they even kind of came into play post CPI, because once the dust settled, I think that's when the action changed a little bit.
Mm-hmm. Just for everyone who is joining us live today, just a quick reminder that you can ask Scott any questions during this event. So the first half here will be Scott and I kind of discussing current market environment and his strategy. But as we get further into the event, he will be answering your questions. So submit those through the chat, and I will ask Scott those questions when we get into the second half. So we want to let some of those pile up. So anything you hear him talking about that you want further clarification on, or if you just have a strategy question, go ahead and submit those. Okay, Scott, so the CPI came out this morning, saw a big rally in futures and rising throughout most of the day, but then a fall off there at the end of the day today as recession fears kind of creep back in for traders. Were you surprised at all by the action on Wall Street today?
Well, going in, I read a lot of macro reports. Excuse me one second.
No problem.
A little bit of a tickle. So we were trying to figure out what the headline would be and what the core would be. So at
Mm-hmm.
first, the reaction was to the upside because the headline looked as if it was less than feared. So the spies are up, 3 points, 35 handles. Some were like, this is weird. Why is this happening? The core is, in line to higher. Equity markets kind of went to see less than 5.5. It was 5.6. So finally, once the computers were done going a little haywire, I think the mutual funds, the hedge fund managers were looking at it saying, hey, this isn't as weak as we would like. So they sold the strength. And That's when the reality set in. And then we went right back into the range as if the news was behind us. And now it's on to the next piece of data, the next situation in order to figure out what to do once, after a few hours, the range digested again.
So there's still more inflation data coming tomorrow morning. The March PPI will be out. This is the other side of the inflation picture, what producers pay and then kind of pass down to consumers in the CPI. And then we'll get a look at how inflation is hitting consumers with March retail sales coming out Friday morning. What's the strategy you're using for these next 2 days heading into the open of each session?
I'm just going to try and be a little light and know what the market's looking for and see whether or not it's hotter or colder, and then know what areas of the range we happen to be in. Because, we're in this range now, and every day, sometimes things feel a little stronger, a little weaker. There's not a lot of muscle memory sometimes from hour to hour, let alone day to day. So you don't want to press something to break down when all of a sudden it just pops back in the range, or you don't want to play for a breakout if all of a sudden it comes back in the range, because then you just lose money both ways. So every day, we're going to be looking at the different stocks, the different sectors, where they're at, what the setup is. And, coming into this week, tech was a little stronger, and then all of a sudden, yesterday you had the news on Microsoft about the slowdown in Azure. So it technically got a little hit. And then you had news on Apple, which they talked about handsets being lower than they've been in quite some time. So the market's been trying to absorb and ignore some of these fundamental pieces of news with tech, but there's only so much that it could ignore. Same way, there's only so many pieces of economic news the market could ignore and still think that they're going to be cutting rates twice this year, when still we have sticky inflation, sticky core, and things aren't disinflating as fast. So when that all happens, everything has to meet in the middle, and that doesn't create the best environment to trade, because you're not getting higher highs and higher lows, or lower highs and lower lows. You're getting a lot of back and forth violence within a range. So you have to be very cool and not get too frustrated and overtrade.
Okay. So the big question surrounding this inflation data is, of course, about the Fed. Everyone's trying to figure out what the Fed's going to do in May, but then also what they're going to do later this year. CME Group's Fed Watch tool shows just over 69% of traders are now anticipating another 25 basis point move at that May 3rd meeting. Fed's dot plot and what they've said is, yeah, that's their plan, and then they're going to pause until 2024. The market, though, is still betting on a couple cuts before the year end, even though the Fed has said that's not happening. What are you anticipating and why?
I've been saying all year, I don't think they're going to cut, especially if the market stays the way it is. You have tech 20% off the lows of last year. The Fed's not going to cut rates with the technology sector in a definition of a new bull market. The S&P, I don't know exactly what it's up, but it's probably up 7%. So I think that they're going to go another 25 basis points, probably, especially if we're around here come May, or a little bit higher in the S&P. And then I don't think they're going to cut unless the market falls apart. And I don't know what that's going to take, because at this point, we keep absorbing the news, and we haven't gone down until we go down. A trickle sometimes turns into a waterfall, or sometimes things don't matter until they matter. So that's why it's been a difficult environment, because if you try to be short, you're not getting rewarded. But every time you feel like you need to be in things, they don't go too far. It's very selective. So at this point, I'm in the camp that we'll probably be at 4.5% come year end. They're not going to cut unless all of a sudden we have a summer swoon, and then they're going to have to, because the recession word that they said today in the minutes might be coming to fruition, and then they'll be inclined to probably do something like that. But if we're sitting at S&P 4,250 or 4,300 this summer, they're not cutting rates. Maybe at 37, 3,600, but there's a lot of time between now and then.
Okay. So the Fed released the minutes of its March meeting today, and that's part of what prompted those whole the recession worry on Wall Street today. So the minutes of that meeting showed members do expect the recent banking crisis with Silicon Valley Bank's collapse and everything after that to cause a mild recession later this year. Those minutes also showed officials were leaning toward a 50 basis point rate hike at the last meeting, like everyone was expecting, until the whole banking collapse happened. Do you think those bank issues ultimately help the Fed in its inflation fight and take a little pressure off of them on rate hikes? Because if if credit conditions are tightening, it's ultimately disinflationary for the economy.
The banking crisis did a little bit of their job for them. It's true.
Yeah.
I think at some point before that, the street was forecasting a 5.5, 5.6% ceiling. So it actually sped things up, which is good. I wish someone hit me over the head, woke me up in a year, and we could trade then, new bull market, once, everything's been normalized. But between now and then, there's still a lot has to happen. So as a trader, you have to be controlled and wait for the environment that's conducive for your trading, or adjust your trading and make less and do some things that, that keep you busy and keep you netting money. But as far as that banking crisis, I was actually talking to a few of my friends who've been trading since 1998, and they actually said, thank God for that. We actually had fast movement. There was 4 days where big volume came in, stocks got hit, and there was momentum to the downside, and they got heavy short and they got paid. You haven't seen that kind of trading this year. So it happened in a lot of those banks, in that environment with, some of the futures. So it actually, every now and then there are 3 or 4 different pockets in the market that make a trader's year, and some of them made their year short, and maybe it helped, the Fed a little bit to get us through this cycle a little faster, because this cycle hasn't been the most fun to trade, especially, in the past few months.
Yeah. So just a reminder for everyone who's watching, submit your questions now. Anything Scott talks about and you want more to know about, submit those questions. If you have a question about T3 trading, about the alpha team, insert those now, or submit those now rather, through the chat, and I'll get to them. A reminder for everyone that Scott is a licensed trader with T3 Trading Group, but he's also the leader of T3 Live's alpha team virtual trading floor, working with other traders every single day, day in and day out, live throughout the trading session. Okay, so on top of this big economic data this week, Scott, Q1 earnings season kind of officially begins on Friday. We're going to get results from JP Morgan Chase, Wells Fargo, Citigroup, the big banks, all ahead of the open on Friday morning. So what are you expecting to hear from those institutions on the heels of this banking crisis?
It's going to be haves and have-nots. The major wirehouses like a JP Morgan and Wells Fargo, they got a ton of assets because just money safer there. Whereas a lot of the regional banks lost assets. So there's probably going to be a few more regional banks when they report. It's like the tide's going to run out. You're going to see who's not wearing a clean bathing suit. But so we don't have those coming up yet. We have JP Morgan, but JP Morgan itself, it'll be interesting to see how it all boils down. Usually bank earnings are messy anyway. I've had a hard time making money. Even when JP Morgan's earnings have been great, they usually sell it. And then a few days later, you're able to buy JP Morgan, and then you get a bit of a trend. So this one, with everything so volatile around it, I'm just going to wait and watch and see, how the reaction to the earnings are, and to the regional banks and to the market, because a lot of people are going to be going on that. So I'm looking at JP Morgan now. Hasn't really bounced much, while the markets bounced from those, banking crisis lows. If you were to do something into JP Morgan, okay, as a trader, I would say it's a Friday, you're better off doing options, because you'll know if you're right. There's not a lot of time premium there. So if you think JP Morgan selling is overdone, it's best in breed, what you probably should do tomorrow is figure out a call spread. So this way your risk is defined, so you can catch a move if you think it's going higher. If you think it's going lower, you can do the same thing with a put spread. So, but your risk is defined. Or you're in the morning around, usually JP Morgan's around 6:45. You're in around 6. You write your levels down. You got 132's resistance, 123 support. It's smack in the middle of the range. And if you think you could disseminate the news and read through it faster than everyone else and trade the ranges, then knick-knack it that way. But I would not be big, long, or short, because anything can happen, with this type of report with all eyes on it.
Yeah. Talk about your approach to earnings season as a whole this time around. This is supposed to be, kind of the second quarter in a row of down profits and down sales. That's what the market's expecting to see from most reports this time around. So how are you approaching this earnings season? Is it different from any past earnings seasons, or do you have a strategy that you always fall back on?
Yeah, well, I have a blueprint for earnings season. I always look at where the stock was 4 weeks prior. Did it run up into its print where it went up 20%? So it's got to be absolutely fantastic. Otherwise, sometimes you get a good report and it sells off, and everyone's like, "Oh, that was a good report. Why did it sell off?" Well, It
Yep.
ran 20% into the report. So you want to
Mhm.
see where the stock was within the past few weeks of trading, so you know whether or not people aren't anticipating anything good, because then typically it'll be past the lows, and then if it's a little bit better, it's going to explode. So vice versa. Sometimes it's, where did the stock come from, and what's the market anticipating? What's the whisper numbers? What's the sector been doing? Is
Mhm.
it part of the crazy narrative, or is it a one-off, just in its own little world? I typically don't take stocks into earnings the same way I just said with JP Morgan.
Right.
What I do is if I feel there's a good setup and there's a good risk reward, or I can make like 3-to-1 on my options, I'll do an option play. And then the day after earnings, I'll see what the candle looks like. And then you get a post earnings play where sometimes you get a big gap up. You could buy versus that gap below. It goes sideways and continues. And you get a post earnings move that you can make money with an active sequence from the upside or downside. So there's ways to try and make money with options into the print. Sometimes you could trade it after hours, but that's like the Wild West. And then there's ways to trade it the day after, once the dust settles and once you see the actual candlestick form.
Yeah. Okay. So I do want to get to some audience questions here for everyone watching. Again, just submit those as they come up and I will ask Scott them. So our first question comes from Daniel, and he said, "My question for Scott is, which platform are you trading on, and do you show how to set up your indicators and charts in the Alpha team?"
I trade on Sterling. So
Okay.
it's very fast. It's very reliable. I don't even remember the last time it went down.
Mm-hmm.
I am a keyboard trader. So I'm an old school guy from Daytech back in 1998. I learned how to trade on the watcher. So I used to, I'm looking at all the level twos. I'm pressing shift buy to take the inside market. When I'm playing market maker, I'm doing shift Q, shift O, this and that. So I am a keyboard trader. You have some guys out there that came from the sales trading side or from the market making side, and they used Ready Plus. So that's like point and click. So you could still use point and click, but I'm again fast on the keyboard. And then I also have a way I could drop down an order entry thing where if I want to put stops in, I can put a stop in. It stays on the system for the day just in case I'm not there and something triggers or my trade changes. I do it that way. We've had some videos on like how to set up, your computer. I'm not the best as far as technology. I don't even have the best setup. I'm like an old dog that learns a few new tricks here and there. But I do have 6 different monitors because I have an
Mm-hmm.
active account that I try and take advantage of the over motion where I day trade for cash flow. I have a swing account when the market's trending. And if we're in a good market, I'm sometimes in portfolio approach with 15, 20, 25 names, and I'm using my tier system around it. So that means I have long exposure there on both. Then I have a boxed
Mm-hmm.
account that sometimes make my share size bigger. So if I'm right, I'm really right. And then I have an options account that if I want to take earnings through binary events and sell some premium, this and that to be synthetically long or short. So I have 4 different accounts, lots of different charts, a lot of news services. So I'm like a funnel taking it in and processing it as fast as I can. And how can I process it as fast as I can? It's by being up early, being prepared, having everything set, by doing my note to go out to regular access, by posting 40 charts in the alpha team, by posting 25 charts in my premium Twitter, and then I do like 3 or 4 in the public Twitter to help. So
Mm-hmm.
by me posting all my content, I'm thinking about it, I'm rehearsing it. So when the market opens and things move, I can execute with confidence. And if you're prepared, things slow down for you. And if you're not prepared, you better take a step back because it's hard to make money when you're prepared. Lately in this tape.
Yeah. Okay, our next question comes from David, and he asked, with the recent bank failures, in your opinion, where are quote unquote safe places to store cash while market volatility calms?
Store cash? I mean, like, do you feel safe having your money in a savings account in the bank? Like I have JP Morgan, I have a lot of money there. You
Mm-hmm.
would feel very safe to have your money at JP Morgan sitting in cash or maybe in a money market account getting 3.6%. And I would not worry. What
Yeah.
I did I take 75% of my money out of Coinbase? I did, because I was trading crypto. I've been trading for 3 years, and I've seen some big name crypto scenarios. SHIT hit the fan, whether it's Silvergate or some of those things. So I have a little less there. I actually started trading BITO here a little bit more, which
Mm-hmm.
correlates to Bitcoin because I feel very confident with T3 Trading Group and with Sterling, with our back offices and where our money is here. I don't think you would have anything to worry about if you were a T3 trader. But again, at some regional banks, you don't know what they've done. You don't know how they're leveraged. And You're insured up to $250,000. I know a lot of rich guys out there that have 10 different bank accounts because they are insured up to $250,000
Right.
in most places. But if something happens, you have to wait, months and years probably to get it back. So, I think ultimately your money's safe in a bank, but
Yeah.
the news cycle likes to sensationalize that it's not. Just again, don't have it at a some kind of crypto exchange in North Korea. Not saying it's a bad place, but you might be safer at JP Morgan or Bank of America.
Yeah. Well, just to follow up on that first question you answered, Daniel said thank you. He says he's on Thinkorswim, but he is thinking of switching, and he will be joining you in the Alpha team soon. So that's
That'd be great.
exciting for him. Before we move on to some more audience questions, and everyone, please do submit those for us. Scott mentioned that he trades on Sterling, and that is one of the options that traders who work with T3 Trading Group get to choose from. So Scott, talk a little bit why you chose Sterling, what the benefits are with that program for you, or is it just you've been doing it on there so long that's who you stuck with?
I just, again, like my whole software has evolved where again, I was a watcher and then it was here, then it was there. And my IT and tech guys would just say, I would say, as long as you give me the same keystrokes, I don't care. As long as it doesn't go down, I'm in 20 positions and I have a lot of money, in the market, I all of a sudden have to wait 20 minutes for it to come back up. So it's been very reliable. There's been no problems. I get my level twos, it toggles to chart. So I could have a 3-minute chart, a 5-minute chart, or 15. Then I also use TrendSpider for daily charts and for other things that I usually mark up. So to me, it's worked. If it didn't work, I'd be like, hey guys, well, give me a better software system to use. Again, I'm not that precise. I do so much that maybe I have some slippage with certain things because again, I'm as prepared as I am. I'm doing a lot of stuff. So I'm not saying just a trader, but there are traders who have like 2 monitors and every little millisecond counts and every little fill counts. For me, my size is probably more than most people, and I'm probably on the phone with Fox Business or talking to Greta or putting things together or in a meeting. So as long as my stops can go off, and when if something goes to the downside, or I could sell a limit when something goes to my target, and I could call trade support here and there, and I know they get annoyed at me here and there, but I'm on the road and taking care of things as chief strategic officer of T3 Live. I have a lot of responsibilities besides just sitting here, every half an hour or so. So either way, it's been really good to me, and I know there are a few other software platforms, but that's not my department. So you would have to talk to the operations guys if you feel like you need something different.
Yeah. Okay, so our next question comes from Michael, and he wants you to explain what a red dog reversal is.
All right, a red dog reversal, which you could Google because there's lots and lots of videos out there, on the red dog reversal. We've done a bunch of different webinars on it, and we've done a lot of different ebooks. But I'll tell you, it's just a way to catch a counter trend move without trying to catch a falling knife. Think about some of the Kathy Woods names from 2001 peak all the way to not even just see the bottom in October. Some stocks went from 400 to 10. And if you're trying to catch a falling knife every single day, you could blow yourself up. Same way, a lot of names have had big moves. So when you're trying to short, into strength, and you can get, caught in a short squeeze pain trade. So the red dog reversal is a way to have something calculated where if just say as an example, because I can't show you a chart, a stock goes down for one day from here, from 60 to 50, down for a second day, from 50 to 40. So now it just went from 60 to 40 and you weren't involved. Maybe you sold strength. On the third day, it breaks below 40, goes to 38, comes off, it shows some relative strength, and now it goes back above 40. So it's not going to be down for 3 days. It's down for 2. You could buy it at that 40. When it reclaims the prior low, put your stop at 38, the low of the day, then all of a sudden breaks through 40, shorts get squeezed, you get a bounce to 42, 43, and you get a bottom tail, and you know where the action area is, and you can make cash flow using a red dog reversal, buy or sell. Or it could help you with your tier system. If you have a lot of size and you all of a sudden, you get a red dog reversal sell, and you reduce it because that means either a pause or it could mean a different direction. It all depends on how you're looking at it, but it's a defined way to identify the action area, and the action area is usually the low of a day 2, day 3, or day 4 to the downside. The same way the action area is usually the high of a day 3, 4, or 5 to the upside if you're looking for a red dog reversal short.
Okay. Our next question comes from Steven, and he asked if you can talk a little bit about how you manage your mindset in trading. He said, I know you have your process/routine with the sauna and cold plunge every morning, but I was wondering if you could elaborate a little bit on how you keep your mind right after a losing streak. Is there a technique that you use? What do you do to help yourself overcome?
That's a good question, because I think, a lot of people have been kind of a hamster in a wheel a little bit the past quarter or so, where
Yeah.
sometimes, you get in a rut and traders feel like they can never do it again. They're never going to think straight again. And that's a hard thing to deal with. I always say just simplify it as much as possible. So if you're a big trader and, you're down for the quarter, you don't try and make back the quarter in a week. You just try and chip away at it. So all of a sudden, maybe you get fully flat. You make money one day, just feel good, get green. Just get green and feel good. The next day, you get green again, you're feeling better. Maybe the third day, now that you're thinking clearly, your strategies actually have more visibility for you. And then you maybe put on a little bit more size. You let your winners run a little bit. Now all of a sudden, you 3 days just of green action, and it adds up, and you just took back a third of what you were down. Then all of a sudden, you're thinking clearly, and you're going about your day, and then you're down, your P&L is red, or you're back to your high watermark, and then you start making money, and then you get a paycheck. My daily process keeps me refreshed every day. Even at lunchtime, I get tired after being up at 4:30 and doing all the morning content and work and trading. So by 11:30, mentally, whether I'm having a good morning or a bad morning, I'm like, okay, I got to go back and take a 30-minute Peloton class and do a quick little rinse and repeat and be back at 1:30. So a lot of people are like, Red Dog, how could you not beat your desk from 11:30 to 1:30? I'm like, well, I have 7 longs on, and if the trade changes, I'll be stopped out. And if a trade happens while I'm not there, you know what? The 4 out of 5 days that doesn't happen, I'm at least keeping my sanity, and that's why I've been able to do this since 1990, almost 25 years. So if you think you're not missing anything and you're keeping your sanity, when you see something that's conducive to your style, you'll see it more clearly, and you'll make more money there by having a positive mind frame.
I know Steven said he knows about your morning routine, but for others who are listening and may not know about your morning routine, talk us through what you do in the morning to prepare for a day of trading.
All right, we can do that. It's a little bit, unorthodox for most people, but it works for me.
Yeah.
So, my alarm wakes up usually at 4:30. So 4:30, maybe I hit snooze once, just once. It all depends on the night before, whether a lacrosse game later, this and that. So then what do I do? I come downstairs, I turn my coffee machine on. I usually have a cold coffee waiting just to have it. And then once that's turned down, I go walk downstairs, I turn my sauna on, and then I walk back upstairs, I let the dog out, and then I sit at the kitchen counter, and I look to see what happened with the European markets, what happened with the Asian markets, where things are at. And then in my head, I'm like, where would the futures be based on what happened overseas? So I kind of think about, all right, what kind of trend are we in? What's leading what? Is Europe a headwind? Is Europe leading us? So all those little things matter. So then what I usually do is I send like 3-4 tweets to Redler All Access, just saying, hey, mostly red arrows around the world. As inflation numbers run hot in Europe, DAX is down this, Asia as well, has our futures down 14. After, a weekday yesterday, let's look at this. So I do some quick, type of thoughts to Redler All Access. And then by that point, it's probably like 5:10. And then at 5:10, I walk downstairs. My sauna is really hot. I go in. At that point, I listen to like a 10-15 minute kind of like motivational video, some kind of video, like a Tony Robbins style. And I work out with weights, and while I'm listening to it, I think about where things are at, what am I going to be looking for, what setups are going on, who do I need to speak to for the day, and by the time I turn around, 15 minutes are done, I'm dripping in sweat, and then I go upstairs. I go in my ice barrel. I have an ice barrel in my backyard. Greta, have you ever been in an ice barrel?
I have not. I'm just now getting into the cold shower thing, so I'm
that's a start.
Slowly.
We'll have to get you in the ice barrel. We'll do a segment from the ice barrel. See how long everyone can last. But believe it or not, my ice barrel gets like a lot of hits. A lot of people are looking to do that.
It's becoming
Physiological,
so
it's great.
popular for sure.
Well, it's great. It's like a refresh. It's like boom,
Hmm.
reset. So by that point, in the ice barrel, I'm actually thinking about the markets again. It's like a
Yeah.
full moon out. My dog's walking around. It's dark. It's only like probably like 5:30 in the morning now, and I'm kind of thinking about whether if I'm long a lot of positions and the futures are against me, what do I have to do to trade around my positions? If everything's in my favor, I'm feeling kind of good. I'm like, I'll sell this, sell that, but I don't want to sell too much. So I'm still planning. The whole morning I'm planning in my head, but my state of mind is different in each moment, whether I'm in the sauna, like getting hot, or whether I'm listening to motivational stuff, whether I'm in the ice barrel, etc. And then and then sometimes right after that, I usually go upstairs and shower. Now it's like 5:50. If it's past 5:50, I have to hustle, because I need to be in my car at 6 to be at Dunkin' Donuts at 6:06, to be sitting here at 6:15, to then log in and say hello, to then do the 6:30 club at 6:30, to be done at 6:55, to then start putting together 30, 40 charts for the alpha team. At 7:30, usually I say hello. I turn the music on that I'm listening to so they can listen to it. We talk
Mhm.
about little ideas, and I'm like, guys, I got to do the rest of my charts. Usually 8 o'clock I'm done. Then I do the morning call, which is all over again, a 20-minute video of all the charts that I put together. And then at 8:20, maybe I stand up. It's first time standing up since about 6:15, and I take a little walk. I usually get a green drink and a ginger drink. That's my breakfast. And then at 8:45, I do another video, usually with the alpha team. And then 9:15, I'm settled down. I check some texts, some emails, things that I missed. Then at 9:30, I start trading.
Yeah. Great. So
Rinse
I
and
mean,
repeat.
you're 5 hours into your day before you even start
Trade.
trading. But I think that's important. Preparation is so important, so that you're going in with a plan and a strategy versus going in blind, rolling out of bed at 9 o'clock and trading
The
30
crazy thing,
minutes
Greta,
later.
what happened is when we had 20,000 square feet in New York City, and I'd be on a desk with like 40 guys, and I'd be in since 6 o'clock, people rolling in, at 9 o'clock, say, hey, what's in play, Red Dog? I'm like,
Yeah.
don't talk to me. Why don't you watch my video, read my note, look at my 40 charts? You can't walk in here and ask me, what's in play, even
Right.
though sometimes that's what I'm here for. But it's like, come on,
Hmm.
9 o'clock, you think you're going to be prepared and ready to trade with confidence? No way,
Yeah.
especially if they're like 23 years old, hungover from the night before or whatever it is. Those times aren't as much. But I'm just saying,
Hmm.
like, if you wake up at 9 o'clock and think you could just make money in this market, you're not going to. In
Yeah.
2020, I did a video, that everybody wanted to leave their job because it was so easy to make money during the pandemic when things were moving. You had 10 different sectors, and I'm like, guys, don't leave your day job. Okay, if you want to
Yeah.
be strategic and confident and prepared, yes, it'll take time. In the same way, right, like a year ago, people like, oh, can I still do this? I'm like, I've asked myself that at least 10 times in the last 25 years. And if you power through it and don't let your highs get too high and your lows get too low and stay even keel, this is the best job in the world, probably 4 months a year.
Totally. All right. Our next question is another from Michael. He asked if you sell premium into earnings, awaiting I think he means volume crash, and then buy directionally afterwards.
I don't sell premium into earnings because anything can happen. You sell
Okay.
premium, you sell Tesla. Right now, I think what did it close at like 180 something. You think it's
Hmm.
gonna miss, and you're like, oh, I'll sell the 190s, and all of a sudden you're wrong, and it goes to 220. It's risk is risk is endless. When you sell premium, risk is undefined.
Right.
Into earnings, what you want to do is you want to, buy options because risk is defined. And I do sell premium, when we're overbought, when the oscillator is plus 80, we're up 6 days in a row. I'm like, I think the spies are overbought. I want to be short here. So maybe I'll short premium $3 higher. So this way, if it continues, they burn the premium off, and then I still can make money even if it goes up a little bit. Same thing if we're
Yeah.
oversold, oscillators minus 50 or 60. I'm like, I think we're close to a red dog reversal low, but who knows? Maybe they gap it open and we'll be pissed off. But instead, I'll sell premium below, so I have some room. So there are spots where I sell premium, but I do it very carefully. I don't do that into binary events because you can get crushed. The worst day I ever had in, I think it was 2021, was selling AMC premium. Believe it or not,
Hmm.
AMC, that's $3. I was selling the $55 calls. Okay, when it was at 40, I can get to 55. and then it wound up going to 60. I was down six figures. I'm thinking in my head what happened with GameStop that went to 200, 300, and PS, I took the loss, and if I would have just taken a walk around the block, the stock closed at 50. The next day it was 40, and I would have been able to keep all my premium, but it got too big, and you could play with your head. So selling premium is good. It's not free money though. Sometimes you make money 9 out of 10 times, and that one time you don't make money, you can give the rest of it back if it's not defined and if you're not doing it the right way.
Right. So in a typical day, what percentage of your trading is cash flow or price improvement against an existing position?
It depends on the market. Unfortunately, I feel like the past 2 years I've been in like 95% cash most of the time. We've been in a range, or we've been in a downtrend, or we've been in a volatile market, or the SPY is below the 21 days. So, I haven't been able to really like put money to work and then massage the positions because it's trending very well. Even though some sectors did it, but there's been always another sector that makes you think twice about doing it with the strong sector. And then by the time the strong sector gets established, it then turns into a mediocre sector. And then it hasn't been a great environment with continuity to have a lot of money working in a portfolio approach. So I've been trying to day trade a little bit more and find little active sequences of a few days to stay with so the market can make me money, but it's been far and few between. It depends on the actual market. And this market, it's been, kind of a love it and leave it, and just expect less, and if you make more, keep it.
Yeah. Our next question comes from Gillis. I'm not 100% sure you'll be able to answer this, but I'll ask it and you can tell me. He said, I am playing the CCL, Carnival Cruise Lines, being above the 200-day moving average. What advice would you give trading this stock?
CCL?
Mm-hmm.
CCL is below the 200-day.
Okay.
And I would say today is a very ugly looking candle where it opened above a prior high, get above and stay above, it didn't do, so fell, then went below yesterday's low. Today is April 12th, if you want to look at that. It went below 979, and it closed below it at the low of the day. So today is a bearish reversal. So if I was long CCL today, I would have been out of it. And if I was looking for a signal to be short, this day kind of would have got me a little bit short on CCL.
Okay. There you go. So Gillis, that's your answer for CCL. And for everyone watching, again, just a reminder to submit your questions in the chat. I will ask them to Scott so we can make sure we're talking about the things you guys want to know about and learn about in today's event. Our next question comes from Kashif. He said, what advice would you give to a new trader who's set only thinking on long trades and having a hard time taking short positions? He said it's like having only a one-track mind.
I would just try and do it very small. Like if you're very comfortable being long 500 Apple, maybe you're comfortable, maybe you're not, maybe 300 shares, but you think that, hey, it's not a long and it looks like you're short, just try 100. Just try it with a little bit, and then if you have success a few times, trying it very small, not to make money, just to show you can do it, then you'll feel a little bit more comfortable and you'll start adding more size because you'll be getting comfortable. So it's the same way as like if you're scared of a dog, you're like, oh, dogs are big and ferocious. And all of a sudden you see a dog and you pet the dog. Ah, it's a nice doggy, and then you get more comfortable. A lot of people grew up, something happened with them with the dog, when they were a kid and they were scared. And then all of a sudden they face their fears. Same thing happened with a lot of people short. Oh, I got caught in a short squeeze. I'm never shorting again. You got caught once, figure out what happened, why it happened, and then next time just have stops and do it a little bit differently. And then once you do it differently and have success, you'll start making some progress in small steps, the bigger ones.
Yeah, I love that analogy with the dog. That's a really good one. Dean asked, or Dean's question is that Nvidia has a perfect shoulder as you like to be. He asked if you would add puts on Nvidia because of that.
So I think what he meant is it's got a head and shoulders top pattern right now, which I'm looking at right now, and it does look like it. There are different types of trades. Today, I know in my note, like which you could see on Twitter, it says, I said actually, Nvidia helped lead this rally and hit a high of 280. Monday, Tuesday gave away to sell it, see how it reacts around 271. It broke 271 today. One little bearish sign, it closed below a prior low. Two, closed below the 8-day. So if you look in the chart in Nvidia today on April 12th, it closed below 271 and it closed near the lows of the day. So if you were a swing short, today would probably be the day to go home short, because now it looks like the neckline is near this 264 with the 21-day right there, and it hasn't been below the 21-day literally since January 9th. So, to play something like that for a trend break, it doesn't happen often, but when it happens, you get paid. So I would say sometimes the neckline is support and doesn't break, but if it does break and tech gets weaker, like it looks like it might, this looks more of a vulnerable short than something that need time to rebuild and be long.
Yeah. Stephen asked, how has trading changed since you began your career, and how do you see it evolving in the future?
You know how many times I said to myself, we'll never make money again, but you always make money. A stock that's at 15 that's going to 30, what does it have to do? How about you ask that question, Greta? It's at $15, it's going to go to 30. What does that have to do first?
Probably drop.
No, it's got to get above 16 to go to 30.
Oh,
then it's
yeah,
got to get above 19 to get to 30. Then it's got to go. So basically, for a stock to go from 30 to 50, it's got to get above 35 and 40. So, it's just how it gets there, and the trade and the action changes. But if a stock's going to go from 100 to 200, it's got to travel a certain path. And then if it gets to 200 and it's got to retrace to 170, it's got to break 190. So, there's a simple way of looking at it, and then there's thousands of different ways of analyticals to look at it. So the bottom line is trading will always change, the speed will always change, but if a stock's going to go from 100 to 110, it's got to go above 101 and stay above 101. If it's going to go to 103, it's got to get above 102 and stay above it. It might play with the number a few times, but then you have to think about your sizing. So either which way, trading will always be here. There will always be different ways things move. It's just how you approach it. And sometimes like lately, you have to give things more room and have less size, because they try and steal your lunch and trigger something below level and stop you out and then go the other direction. It happened to me 3 times today. But if you give things more room with a little less size, then they can't do that as much. So every environment is a little bit different. Some environments, like the pandemic, we went down just as fast in 2020 as we went down at certain points in 2008. And then in the most recent down move, it was the worst. It was like everyone's like, oh, don't you make money in volatile situations? I'm like, yeah, but this volatility is just like violence in a range. You're not going anywhere, volatility. So you have to just recognize the environment, and the more you're doing this, the more you'll recognize the environment. And then if you don't see what's happening, then do nothing. Just watch it, and then look back and say, oh, look at that chart. I could have done that there. I could have done that there. And and you look at past patterns, because they usually repeat themselves, because all patterns are human emotions, which computers are still programmed by humans. So it's the greed, the fear, the complacency. So I do think trading will be here forever. It's just a matter of the mechanics of it, and a lot more of it's computers. There's not going to be a lot of people with this thing like I do, with the keyboard, Shift Q, Shift P. It's going to be like a lot of coders saying, if this happens, then do that. If that happens, then do this, et cetera, et cetera. But there will be lots of leadership stocks, lots of innovative sectors, and one bull market will be not the same as the next bull market, but a lot of patterns have to repeat themselves, because we're going to have to have a big winner go from 200 to 220. What does that have to get above, Greta, first?
201.
Exactly. See, I can teach anyone trading and the markets. There you go.
Okay, so for everyone watching live, we have just about 15-ish minutes left. So get in your questions now so I can make sure to ask them to Scott. I have a few more questions that we can talk about as well. If no one else has any to submit, we'll get to that. So Scott, we are about almost 2 weeks into the second quarter now, and the first quarter was pretty good. It was a pretty good quarter, rosy quarter for the most part, until kind of the end there with the whole banking issue. What is the strategy you're using for this quarter? What are your expectations for this quarter as that recession fear, that underlying concern about a recession starts to take a root in the market again?
Well, and to start the year, the recession fears were there also.
Yeah, it just feels like the last couple weeks, the sentiment is more fearful than it was maybe at the start of the year.
Okay,
Because now you have the
that's
Fed at
fair
least
enough.
maybe admitting in their, you're seeing it in the minutes from the Fed today, them talking about a recession instead of saying, oh, hey, we still have a chance for a soft landing. Even the officials are starting to come around and say, no, this is probably what's going to happen at the end of this year.
That's true, because I
Yeah.
think in November, December, it was really just all the analysts were forecasting a
Right.
recession in the first half. And here
Mm-hmm.
we are in April, and some say we're in a recession, and some say we're about to be in a recession. And at
Right.
this point, the definition of a recession hasn't happened. So, what you're asking is very important because if we're going to go to recession, okay, there's certain valuations the S&P historically are at if you're in a
Mm-hmm.
recession.
Right.
And where we are now is not those P. That's the analyst's whole argument is that if we're going to go into a recession, PEs should be 16, 17 of the S&P or 14, 15, not 18, 19. So there has to be a multiple contraction. So it just
Mm-hmm.
depends on, is it a slight recession, a mild recession, or is it going to be the Great Recession? At this point, it's
Right.
just all conjecture and it's all opinions. So,
Mm-hmm.
I'm going to watch the market. I'm going to see for a little while. Bad news was good news because
Mm-hmm.
bad news meant that perhaps the Fed will not go as high and raise rates for as long, so the market would go up. But then at some point, bad news becomes bad news because that means things are deteriorating, and
Yeah.
and
I
then
think
we
we're in
might go to a recession.
that shift right now. Kind of saw that with the,
It's a little, yeah, it's a little shift. Like today, the
yeah.
first time the Fed actually said we might be in a slight recession later in 2023.
Mm-hmm.
Which
Yeah.
is, and as a trader, you have to write down these little slight things that change. Same way when
Right.
a trend goes below the 8 day, it's a little weaker. Be
Mm-hmm.
careful. Maybe other things go below the 8 day, and then below the 21 day. Okay, now the momentum is kind of lost. Be a little tactical, and then then all of a sudden, as a trader, you don't have to be involved, and then because you could test the 50 day, 100 day, and 200 day. But in order to get to the 200 day, you got to break the 8 and 21 day first. So
Mm-hmm.
at this point, we're not even below the 8 day in the spies, and the Fed's talking about recession. So this is not a priced-in recession yet.
Yeah.
It's we're not even at where we were when the banks failed at 380. We're at
Right.
411. It's like that's why the bears are all frustrated because like, what are we doing up here with all of this? All these headlines. Like you Google second quarter earnings, like the headlines on earnings, like earnings recession, earnings
Right. Yeah.
Armageddon, earnings. And meanwhile, we were this morning we were like 3 or 4 points off the highs of 2023 in
Yeah.
the spies.
You've been trading for, as you mentioned, almost 25 years at this point. So you've seen all different kinds of market cycles. You've seen recessions, you've seen bull markets, you've seen bear markets, and everything in between. How our last big recession was 2008. We had the financial crisis, a major recession. How different is the market environment now compared to the market environment that was happening in 2008?
I don't know if I was just a little bit, maybe I was not immature, more. I was doing it for 10 years, but in 2008, I was actually on CBC once a week with Erin Burnett, who looks like she
Mm-hmm.
could be your sister at the same time then. Her. Well, she's a little older now. Back, she was probably
I
your age then.
I love Erin Burnett. She's great.
She with her and Mark Haynes, and that was
Mm-hmm.
scary. I rode a ferry to downtown Wall Street with 40 people in 2006, 2007. By the time we were halfway through that market cycle, there was like 10 people left. People
Mm-hmm.
fired everywhere. There were 8 million people out of work during that recession. And here there's still 8 million people looking for jobs. It's a weird
Yeah.
dynamic where it's like, wow, like, you have the JOLTS indicator, there's 8 million jobs. There's help wanted everywhere. In
Mm-hmm.
2008, it was not like that. And then you had the housing crisis on top of it, where you had foreclosures everywhere because
Yeah.
of the mortgage debacle, where they're all tied up and everyone was doing interest-only loans, and they had 5, 6 houses. Thank God, bank is not like that. So
Mm-hmm.
there was a lot more fear there,
Yeah.
during that, and the action was fast and furious, and there was like no social media. So if somebody wanted to see me on TV, they'd have to watch a 4-minute little segment, with Mark Haynes and Burnett. Here, everything's interacted, and everything's much faster.
Mm-hmm.
Even though the market's moving much faster right now.
Yeah.
So it felt like there was a lot more fear. Maybe I'm more experienced now, so I know that. Listen, as much fear as it was, I talk about my wife's Blood on the Street account. Everyone likes that one because it's a cash account. What happened was she worked at UMDNJ. So from 2004 to 2010, she had a 401k, and then she left to go into private practice in 2010. And basically I wasn't allowed to put any more flows into that account because she was leaving a state institution to work for herself. So basically I put that into a fixed rider, which was like meaning like cash, because the S&P went from 15, it started at 1500, went to 666 into 2009. And then by 2010, it was here. And then by 2013 or 14, it was already at like 2,500. So her average cost was built during the financial crisis. So that's why I say to individuals like you, or even anyone in their 20s, you want a bear market crazy environment because you want to have that cost average. You don't want to try and time it. So that's when you put every monthly flows in. So as scary as that was, if you have a long-term time horizon, you make a lot of money. A, if you're trading in the volatility is great, and B, if you have a long-term 401k where you put money in every month. Now, the only reason why I stopped doing that in her account is because I had to move it because she's in private practice. So, like everyone's like, Red Dog, what do you do with your long-term money? I have a 401k myself. Every month, I don't care what the market's doing. 50. I'm hoping to do this for another 15 years. My wife is 45, so she has a 403b. She's doing it. My son's in 8th grade. I do believe a 529. When you have your child, I started late. Chase was 5. I should have started it when he was 1. So I actually just increased. Instead of 500 a month, I'm at 750 a month because we're 18% off the highs. And I do think in 8th grade, by the time he's a senior, 2025 will probably be at a new high in the S&P. Do I think this year? No. So again, on that question of what kind of market do we think we are now? I think we're in a sideways digestion market, kind of like we had during that decade of congestion that happened from 99 to almost 2011, where we just had a huge move from the pandemic of 2000 to 4,800. So right now the Fed is raising rates to get rid of the excess in the market. They give out way too much money. They give out free money. There's excess, and everything rose. So now they have to have things consolidate, and during times of consolidation, they have to wring out things that shouldn't be going on. Whether it was gas at $5, eggs at $6, $7, people paying $50,000 for a car above MSRP. Like that was a year ago. Bidding wars on houses. So all that has to stop. Otherwise, the dollar won't be worth anything. So into that process, and those type of processes and the cycles happen. That's why 2 years ago, when everyone's like, "Oh, I made 5 times my average trading year. I'm going to buy a house in Miami," and this, I said, "No, pay your mortgage down, buy 2 cars for cash, because when trading tightens up, you can make some money. But if you have a bigger nut and it's not the same environment it was, a bunch of different times, you can get frustrated, you can over trading, become a shell of yourself, and chances are you're not going to be trading anymore, even though you're a good one, because you're not going to be able to pay your bills because you got too big during one of the good, 2 best years. Usually in a career, you have 3-4 awesome years, and then you have your cost average years, and then you have 1 or 2 down years, and it becomes a cost average, especially in trading, because you eat what you kill. I hate to, am I allowed to say that in this, the world that we're in?
Say whatever you want. Yeah, you're good. You're good.
Eat what you kill. I don't know. Sometimes I do presentations and not say he or she, or ladies and gentlemen, but I say hello everyone. But anyway, so I just had diarrhea in the mouth a little bit. But
you're fine. All right, I want to get to the last couple questions here, because I know you do have to get going soon. So our next question comes from Gillis, and he asked if you trade bar by bar using pivot points, or would you use moving averages more?
Use them all. There's actually a great class if you email. I don't know who's on this with either Greta or me, and they can put you account. So there's a bar by bar analysis class that I learned when I took the pristine method in like my first 5 years of trading, and it was like just candlestick analysis, because candlesticks mean things. A big igniting bar is called an igniting bar because it sometimes ignites a move out of a range, and when you get an igniting bar that reclaims the moving averages, it means something also. So knowing what bar by bar analysis means on top of moving averages with chart patterns, you put it all together, usually there's a good opportunity to make some money there. So it's all part of the process. Sometimes one means more than the next, but they all mean something.
All of those indicators used together to get, a solid strategy for yourself. Tiffany asked if you tape read as well on a daily basis.
I do. Right now I'm looking towards my left, actually. Like here's our Zoom meeting. I have 1, 2, 3, 4, 5. I have 10 level 2s. that have the inside markets, even though it's slowed down. It's like only 5:14, but during the day, I do like to see, I'm a tape reader. I used to just watch the scroll and go by on CNBC, and you can see what's happening. I don't do that now because CNBC, I gotta turn it off. Okay. But I do tape read. Sometimes you can see when things get fast, that volume's coming in, and then you combine that with the bar being formed on a 3 or 5 minute basis, and then it takes it back to moving average or ignites out of a pattern, and then it helps me make my decision. So it's part of my decision making process. It's also just something I'm used to. Not everyone's used to doing that because we did that, a while back.
Right. Dean asked if his question is, so he was part of the Newsbeat VTF's free pass today for CPI Day. He said he followed JR today and his action was on point, especially on Tesla. He asked if you speak with any other T3 traders before the market open and share some ideas, or does each trader in T3 Live kind of go with their own flow?
Well, there are certain people in different rooms based on their style. Like I have the alpha team at like 6:15 in the morning. There's 120 traders in there. And I'm like, good morning. He's like, Red Dog, could you look at a chart of that? Or hey, Red Dog, could we look at a chart of this? And I do it. And then by the time it's 7:45, there's like 300 traders in there. And then I have a few minutes to do it. And by the time 9:15, there's usually 500. So, so I'm usually interacting with them. If Derek from another room says, hey, I have a question, I might get a text. Joe is a great trader right here. When he comes in, he usually likes to give a little bit of his thoughts. And so it depends who's around you and what room you're in. But we're all one big team here. If someone has questions and they know that I trade Tesla really well, or, they know I've been involved in Google for 2 weeks, they might say, hey, Red Dog, what level are you looking at to add, or where's your stop? And, I always give out and that's what I have on my note and in the charts. So we try and all communicate, but not everyone has the exact same style. And also, sometimes it's expensive, to be in a lot of different rooms. But if you do talk to your trading counselor, usually if you want to be in a bunch of rooms, they'll work something out.
Yeah.
I would think.
All right. So Derek said, hey, Scott, we're all one big team. So definitely. Just
Derek's
for everyone. On? Yeah, he is.
Derek, I've been doing push-ups for 9 months now. I'm ready for another push-up contest.
Oh, he's calling you out.
We'll do it live. I'll put it in. I'll give you odds.
All right. So just so everyone knows, again, Scott is a licensed trader with T3 Trading Group. So is Derek Olden-Smith, who's in the comments, and all of the other traders who I have on these live events. They're all licensed traders with T3 Trading Group. Not everyone who leads a virtual trading floor with T3 Live is with T3 Trading, but Scott, Dan, Derek, and Pat, who I've had on all of these events and will continue to, are all part of T3 Trading Group professionally. Okay, Scott, so I do know you have to run, and we are good.
I have a lacrosse game, yeah.
Yeah, he's got to get to
bring Chase his dinner home by 5:30.
Yeah, got to get to
playing Livingston tonight. Anybody in New Jersey want to see a big rival playing Livingston, Milburn versus Livingston, 8th grade?
Okay. Well, good luck to Chase in his lacrosse game, and I hope it's not too stressful for you as dad, and it's a good game. But everyone, thank you for joining us today. Scott, thank you for joining us today. For everyone watching, I'm going to put a link in the chat. Let me just grab it really quick. I'm going to put a link in the chat for our next live event. That will be next week, and that will be with Dan Darrow. He is Scott's counterpart in the Alpha Team VTF, as we've mentioned a couple times. He is an options specialist. So if you're interested in options trading at all, Dan is the guy, and we'll probably be talking a lot about that. So that will be 1 week from now at 4:30 p.m. Eastern. Please register for that and join us. And again, thank you, Scott, for joining us. Scott will be back in about a month. Once the date is confirmed, I will post about it. Yes. So thank you again, Scott.
Thanks for having me. Great seeing you, and I wish everybody luck. Just keep working on your process, and you don't need to be perfect to make progress. Just little things, they add up, and just keep your balance. You keep your balance. The pitch will come, and you'll swing harder once you have a little bit more visibility. It takes a little bit of time.
All right. Bye, everyone.